and welcome to the Your Financial Pharmacist Real Estate Investing Podcast, a show all about empowering pharmacists to achieve financial freedom through real estate investing. I'm Nate Hedrick, and each week, my co-host David Bright and I explore stories from pharmacists all over the country who are achieving their real estate goals while maintaining a meaningful career in pharmacy. Whether you're a first-time investor or a seasoned pro, we're here to provide education and inspiration about the world of real estate. Please note, this podcast is intended for educational purposes only and should not be considered financial or investment advice. Hey, David, how's it going?
Hey, good. Thanks, man. How you doing?
Good. I am officially closed on our new Cleveland purchase, so I'm excited to dive into the rehab, and I know we're going to talk through some of that today. So it's a nice mix of excited and terrified.
Yeah, no, that's a great synopsis of what closing day generally is. And then walking that property for the first time once everything is out of it, or like hopefully everything's out of it. But yeah, absolutely.
Right.
So yeah, what we're doing today, this is great timing because today's episode that we're recording is part 2 of a 2-part series. So if you haven't listened to episode 44 yet, this will make a lot more sense if you hit episode 44 before we dive in today. But one of the things we've talked about routinely here on the podcast is we oftentimes feature guests, but every few episodes, we take a break and we do what we've been calling a deep dive on a topic to get into some of the more frequently asked questions that we hear. And so last week, we went into a lot of the theory and the rationale for planning a rehab on a rental property. Even though we talked for an entire episode, I know that it's sometimes hard to really pick out how that tangibly looks without examples. So we thought this week we're both starting rehabs in our world. So this what a great opportunity to walk through 2 different examples of very different rehabs and why those are so different.
And the theory that we really try to bring out in the last episode, and that I want you to keep in the back of your head as we're talking today, is that no matter how seemingly turnkey a property is, right? Even if it is move-in ready property as much as you can possibly be, the property always needs something, right? There's always going to be little things that you can do to improve it, things that from either a safety standpoint, like we talked about last week, or from a quality of life standpoint or delaying repair standpoint. There's always a little things that you can do, a few $100s there in small tweaks or fixes that can really make your life easier. So just because you're getting into a new property that doesn't need a lot of work does not mean that you should ignore this kind of stuff. It's still very important.
Yeah. And so again, for those 3 big things that we talked about last week that will frame a lot of our discussion through this week is one, we put first and foremost the safety of the tenant. So things like new smoke detectors and things like that imply safety. And as pharmacists, I know we're very much safety focused. The second thing is the longevity, or even you could consider it the safety of the building. So how does the foundation look? Does the roof need replaced? How about the furnace? Some of those big kind of expense things that help to keep that a strong investment for a long period of time. And then third, the thing where a lot of us just are tempted to jump to first, but we tried to put third on the list, was those cosmetic improvements. So things that can be value add, can make a property really exciting for a tenant to move into, or if you're flipping a house, really exciting for a buyer, but are more cosmetic than functional or safety focused.
Right. And again, we're covering 2 examples this week. We both got upcoming rehabs. Both are a little bit different, but they're going to be over the next couple of months. And so we thought we would dive into both of those as ways to, again, really showcase what this looks like in practice.
Yeah. So Nate, why don't you start with some background on your property?
Yeah, so this is an interesting one. And again, I told you I'm slightly terrified, slightly excited because it's a bigger project than we've taken on ourselves before. You know, you and I have worked together on some properties in other areas, but this is local for me. So it's in the 150 to 200 range, depending on how we fix it up. It's a B neighborhood. Rents on the low end for this type of property are probably it's a single family home for what it's worth, 3-bedroom, 1.5 bath. Low end rent in this area is probably $1,500. High end rent is easily $18,000, depending on how fixed up it can be. Again, this is a neighborhood I'm really bullish on. They've got great amenities in the nearby community. They've got great school districts. It's just one of those neighborhoods that I always am keeping a really close eye on. I get a daily email from the MLS, and that's exactly how I found this one.
Yeah, and that's quite different from the property that we're working on. So we're in a neighborhood that's kind of $70,000 to $100,000 range properties. It's more of a C neighborhood. So rents in this area for these $70,000 to $100,000 homes might be around $800 to $875, depending on how fixed up it is. So meaning that really, if we made it, fully open concept with granite countertops and stainless appliances, and we shiplap every surface in the house, like it's still only going to increase that rent from 800 to 875. So knowing that from an appraisal standpoint, the top of the neighborhood is probably around 100 grand, it certainly doesn't make sense for us to do a huge rehab on this one. So we're doing a little different finish level than what you're working on.
Yeah, but what I like is that the properties are still translatable, right? This applies whether you're talking about a $150,000 property or a $500,000 property. That everything scales pretty nicely. So I think these are just two examples of kind of where most investors tend to jump in, and I think that's translatable no matter who you are or where you're investing.
Yeah, so let's talk about that a little more. So Nate, with the property that you have, with the rents kind of, again, that 1% rule range of that $150,000 to $200,000 property, so meaning that $1,500 to almost $2,000 a month, knowing that the investment looks like that, I'm guessing that it pencils out pretty well on paper from a math standpoint. But now as we get into these improvements, what's your plan for some of the tenant safety and some of those kind of pieces there?
Yeah, as far as focusing on tenant safety, so the interesting thing about the community that we're buying in is that they have what's called a point of sale inspection. So the city actually has an inspector that works for the city that will come out, and before title can transfer, they will do an inspection of the property for the purposes of health and safety. And they'll say, look, if you don't have smoke detectors, carbon monoxide, handrails, all this stuff, you need to improve that before the property can transfer. The other thing they'll look for is cosmetic issues. And we'll get into this more, but they'll look for major cosmetic defects or things that could become problems down the line that they will make you correct prior to that title transferring. And so part of when we went into this, we actually knew that we had an inspector actually lay out some of the safety violations that the property was missing. Simple things like smoke detectors, but also, other areas where there was chipping, flaking paint or a loose handrail, things that again, could lead to problems down the road. And so we have this point of sale inspection that can help us out. And we actually, as part of the negotiation process, took that on for the seller. So the seller is a relative of the original owner of this property. That owner passed away. Seller was dealing with this from out of state, did not want to deal with hiring contractors, coordinating people in the home, dealing with even putting up a simple, $30 smoke detector is a big pain for them. So we took on that property point of sale inspection ourselves. One of the other big things that we're going to be doing from a safety standpoint is again, looking at things like the handrails, especially specifically up the stairs and also off the balcony, making sure that balcony is going to be safe, whether we had a tenant in there or whether we were to sell that home to somebody else down the road.
Yeah. And one of the things I like about that strategy too, because we try to do that too, where I'd kind of rather have, and again, it's my kind of like control freak pharmacist thing, right? But I would rather have a contractor that I hire make those fixes, because then I have a little more assurance that that's done right. If the seller's doing that on the way out, then, sometimes I question that because I've had that come back to bite me before. So I like that strategy of not only is it easier on the seller and maybe that creates a discount situation, but then you can also sleep really sound at night knowing that was done correctly.
Yeah, the tricky thing about this community is that, and I completely agree with you, the tricky thing here is that when you assume the point of sale in this particular community, you have to get an estimate for the repairs that are required from a licensed contractor with the city. Then you have to put 1.5 times that estimated amount in an escrow account so that they know you're going to pay for it. So they do a lot with this city to make sure that the properties are well maintained, but it is a total pain to establish this escrow account, basically sock a bunch of money into it that I hope to get back in 3 months. I agree. It's a good way to make sure that I'm in control, but it's also kind of a pain in the butt because of this particular community that we're dealing with.
So next up then too is some of the structural safety. So I know that there's a lot that goes into the tenant safety side of things. You've got that line item, you've got that escrowed and ready to go. So when it comes to roof, windows, furnace, foundation, like how'd all that stuff turn out?
Yeah. So good news, roof is great. Furnace is awesome. Hot water heater is pretty much brand new. All of the major things like the driveway, the garage, all that stuff was structurally sound. The biggest issue that we found, and really truly the reason that we got it for such a good deal, is that there's a major plumbing problem in this property. And so I still don't know yet what happened. Ask me in a couple more weeks. But basically there was either a line blockage or a disconnect of one of the pipes in the upstairs bathroom that sits right over the top of the kitchen. And now when you turn on water to the bathtub, that water, instead of going through the pipes, it goes into the kitchen ceiling and through the light fixture and all the other good stuff. So that at some point leaked. It still leaks to this day if you turn that on. And so the kitchen floor is completely ruined. The ceiling is completely ruined. Most of the wall next to where that kitchen space is will have to be repaired and replaced. So there's obviously major structural issues with that. We also planned for the unknown, right? We don't know how much of a water problem that is until you actually get into that wall. And so structurally, we're going to have to evaluate that once we get some of the drywall taken down, get the flooring removed. There might be subfloor that needs to be replaced. So that's our big wild card and kind of unknown factor on this one.
Yeah. And that sounds like, I know in a lot of areas, like painters and handyman kind of people may not be licensed, some of those kind of things. But in this case, it sounds like you're needing a licensed builder, like someone that really knows their stuff for some of those structural things.
Yeah, absolutely. We want to make sure we're doing that all right. This is the kind of thing that, like you said, with a cosmetic improvement, laying down new flooring, something like that, it's a different story. But when you're talking structural safety, a major component of the property itself, we want that to be done absolutely to the letter.
Yeah, I often hear investors say like, oh, I know a guy that can fix that. And like, that's a scary phrase to me, unless that person is really knows their stuff. And generally that means they're licensed and they're insured and all those kind of things. So yeah, particularly when it comes to some of these structural safety things, when you want to entrust this property as a rental in your portfolio of investments for quite some time, you definitely want to make sure that's done right. Yeah. And then the other example is like, if you need to paint something, that's more at like my skill level as a pharmacist. Right. That's about the top of my skill level. And that's a very different story. But speaking of those cosmetic improvements, what do you have planned for this one to make it stand out among the crowd?
Yeah, so a number of things. Every room is going to get fresh paint and new flooring or updated flooring. So we've got really nice hardwoods all throughout the property, but almost all of it needs to be refinished. So we're going to try to save what we can. I'll probably LVP over most of the living spaces though, because again, just from a tenant proofing standpoint, if I ever want to refinish those and flip it someday, I can. But from a kind of a tenant proofing, the flooring, and we usually allow pets in this particular community because dogs are super popular in this area. So again, I don't want claws scratching up our nice hardwoods, so no reason to refinish those yet. So we'll probably put LVP throughout. Like I mentioned, the paint. We're going to update the kitchen. The cabinets are actually fantastic, and we're hoping to save them if we can. Just update the drawer pulls, put in new countertops because they've got old laminate, and I think granite or quartz will go a lot better in this particular neighborhood. And then just a lot of like other, here and there cosmetic updates, making it look a little bit more modern. The bathroom vanity needs to be completely replaced. The mirror, the fixtures, things like that will go a long way to making it look more modern, that add up as $50 and $75 purchases here and there that are going to go a long way to the overall look of the property and feel.
Yeah, so there's a couple things out of there that I want to dig into a little more. You mentioned Lvp flooring. So can you tell people what that is and what that has to do with tenant proofing a property? Because you said there's hardwoods. I feel like there's people screaming like, no, hardwood floors, you got to keep hardwoods.
Cover those.
Yeah. What's Lvp? Why would you put that in there?
Yeah, so luxury vinyl plank is a great hardwood alternative. If you look at pretty much every picture on HGTV right now, almost all the flooring you're seeing is luxury vinyl plank, right? It's that it looks like wood, but you can get it in all sorts of range of colors. It's more of a like a plastic resin material, so that it's very resistant to scratching, denting, things like that. And the type that we use doesn't even stick to the floor. So it's not like it's going to be ruining the hardwoods and then I have to peel it up someday. This is actually like a floating interconnected floor with a pad, so that it will protect the wood floor underneath while giving you a really nice look and feel on the top. And again, it's a really modern and luxury looking product, but the price point isn't nearly as bad as putting in new hardwood floors or something like that.
Yeah, and a lot of those products are waterproof also, right? So when you talk about pets and potential pet damage and things like that, much more resilient to what a tenant can do to a property.
Yeah, and it gives us options on things like the basement floor, for example. The basement it has a really nice finished area, but the old tile in there is just atrocious. It'd be so much more work to tear all that out and try to put in something new. Whereas as long as it's level and in good condition, which most of the tile is, we can actually LVP right over top of that, which creates just so much less work with a really great finished look.
Yeah, the other thing you mentioned that I want to dig into is countertops. So you said that quartz and granite is a really good fit in this neighborhood. So how did you figure that out? And what made you really cement that decision?
Yeah, so when I do an evaluation of a property and trying to figure out what it's going to rent for and how I'm going to attract tenants, we want to be one of the nicest ones in that price range, right? Because the thought is if someone's going out to rent in that neighborhood and there are 4 properties available that are all at $1,750 a month, I better be the nicest looking one, right? Or I better be the one that people are going to want to go look at first. So if I can't win on price, which I don't want to compete on price, I better compete on finishes. And so if we looked at the other properties that were renting higher in the neighborhood and they had updated finished kitchens with, again, nice quartz countertops, updated modern fixtures, things like that. So we're gonna match the neighborhood to make sure that we can maximize value.
Yeah. So looking at those rental comps that are out there, looking around, seeing what that is. So, and it sounds like too, that's telling you a little bit more about the rent rates, because earlier you mentioned a pretty wide range on rent rates. So it sounds like your strategy is to hit the higher end of that. And what do you think would be, had you not made these updates, if you would have just, cleaned the place up, fixed the plumbing problem, stick a for rent sign out front, what do you think you're going to drive the rent rates?
Yeah, that's a good question. I think probably if we did nothing, I still think it'd probably bring in 13 or 1400. But again, I think we can get 300 or 400 more out of that if we really fix it up. And again, my wife and I have this longstanding rule that we don't put together properties or we don't list properties that we wouldn't live in ourselves. And this place is just due for updates. Like, yes, it could probably rent out in current condition as long as we fix up the plumbing issues. But like, we want it to be in a state where it's a gem of the neighborhood and a really nice place to be. And that's just how we do business.
Yeah, I know another part about the fixing up strategy, because certainly if you can drive the rents, $400 a month more, that's $4,800, almost $5,000 a year in additional rent revenue to have it fixed up. So that does help to defray that cost and that investment in fixing up that property. That investment isn't lost either. It's also driving the appraisal on this one, right? Because you're planning for the BRRRR strategy. Is that right?
That's the goal. It's going to be a bit trickier this time around because we didn't buy it in cash. We actually, again, it was livable. So it's a habitable property today. So the mortgage was approved. And so we actually bought this on a conventional mortgage, 25% down conventional mortgage, with the goal being that we're going to put, 30-ish, $35,000 in rehab into the property. And then I think when it's all said and done, we'll be able to do the cash out refi at 75% loan to value and get most, if not all of that money back out on a new conventional mortgage. So we'll actually refinance it into a new conventional mortgage. So like you mentioned, that higher rent rate and the higher value translates to a higher appraisal, which allows me to pull more of that cash back out once we're all done.
Yeah. So by making that bigger investment up front and by doing that rehab, initially you're able to buy it, to renovate it, to rehab it, refinance at the end, and then hopefully repeat, because you're not leaving tens of thousands of dollars hopefully into this transaction, but 6 months from now you'll be able to do that cash out refi and then go do another one.
That's the hope, right? It's all part of the grand plan. We have to see how it actually matches out. So
yeah. But the nice thing too is that even if you end up quite a bit off, like even if this plumbing problem ends up being more substantial, or you're doing a lot of framing work behind the drywall that you couldn't see or things like that, there is some leeway in there. If you have to leave some money into the property, you're also getting pretty solid rent, and hopefully that'll help to defray that over time.
Yeah, absolutely. We have another property down the street from this one that we just did a simple 25% down long-term buy and hold. And that's actually one of our best performing properties. So leaving money into the deal in this case is not a bad thing. We want to minimize that if we can, just so we can keep rolling that cash around. But it's a great neighborhood. I'm long-term bullish on that. We're happy to have another property in that location.
No, that sounds great. Anything else that you chose to do to tenant proof this property? Anything else that you're doing to make this just really simple and bulletproof, and so you have less to worry about over time?
Yeah, the two other things I think I'd mention quickly is just the balcony upstairs, like I said, is right now, it's probably to code, but it's not overly safe. And so from like an insurance and safety perspective, we're really trying to over engineer that balcony so that it's something you can't fall off of, and that there's, really solid railings throughout, that the railing is not going to impact the roof line at all in terms of damaging that. One of the biggest problems that people have with balconies is that they get this roll top roof over it, at least in our area. Then they go and they drill holes into that roof to install their balconies on top of it and their railings, and then they ruin the roof system. And so getting that all done right by someone that actually knows what they're doing is super, super important. So we're going to have that all redone to maximize the benefit there, so that, again, we're not getting a call about a leak in 6 months from now.
No, I love it. Love it. I think that makes really good sense to get all that stuff handled at the front end so you have less to worry about. And this really can be more of a set it and forget it investment rather than something that's distracting you all day long when you're trying to be a pharmacist.
That's the hope. So, all right, let me turn the tables on you then, David. Talk to me about this. So you said the range of rents is 800 to 875, just to recap?
Yeah. And again, this is an area where we just don't see a lot of fluctuation in rents, and probably because there's also not a lot of fluctuation in terms of quality of property in the area. But yeah, everything in that neighborhood is pretty consistent. So a lot of what we're going for is getting it safe and making it attractive to the tenants that are looking.
So let's talk about that, the safety part. So start there. Again, same way that you asked me, what did you do from a tenant safety perspective to get things under the right conditions?
Yeah. So this house, we're very fortunate that it has solid bones. So fortunately, in this one, it's not raining in the kitchen, so that makes our life easier. So
I'm jealous.
Yeah. No, we were able to do inspection pre-purchase, and so we found that the electrical, the plumbing, the roof, the foundation, the windows are all in really good shape. In fact, it's a newer roof and newer replacement windows, which are nice. The furnace is been updated. So a lot of these things from a safety standpoint are much easier. And there's also a very clear rental code in this town. So it makes it just very checklist oriented to go through, like we all do for our pharmacist jobs. You can work the checklist and you can make sure that you've got the handrails and the smoke detectors and all those things. And then the local inspection unit will come through and will double check that all that's been done. And then our property manager will walk in and also make sure. So the safety side of things was much easier to manage in this case. It didn't need a lot of those big ticket kind of hidden items. And that made this a much more attractive purchase.
Nice. Okay. What about cosmetics then?
Yeah, I feel like cosmetics is the tougher one in this case because the property's not in an A neighborhood. So some of those finishes that you're talking about, like granite countertops or tile backsplash, that's really not generally expected. And I know one of the things we talked about in the last episode when we were talking just kind of theoretically about this is that, like, that's okay. Like, not every house has to look like HGTV. In fact, like the house that I live in with my family, like, we don't have granite countertops and we don't have a tile backsplash. Like it's okay. Like, right, that houses don't have all these high end features. Sometimes in some areas, they're just simply not expected. And so what we did is we went through and did the same kind of thing you did. We looked at rental comps and sales comps in the area, which is super easy if you're a realtor. If you're not, you can ask your realtor for that, or you can go online and pull that information from several other websites as well. But that helped us to understand kind of those general expectations in the area.
And so, yeah, it sounds like you've got kind of an idea of that target rent rate. Any thoughts on how much you're targeting for that overall rehab cost then?
Yeah, so we're hoping to make this a relatively inexpensive rehab. Some of the things that we like to do are to, just like you're doing, save the cabinets if we can. Not every house needs to be a complete gut renovation. So in this case, the cabinets are in really good shape and the layout is really good too. Like, just from a simplicity standpoint, all the cabinets are on one wall. And so we can get a single 12-foot pre-cut stretch of countertop and we can just replace the countertops right there. And so a lot of these finishes are kind of just standard size, standard everything at a lot of the big box stores. Even the cabinet poles, like you mentioned, that you're replacing. It's another thing that we're doing too, just to add a little bit of update to an older but in good shape cabinet. So one of the things we did at the inspection is we measured the distance on the cabinet poles. We found they were the very standard 3-inch size. And $20 on Amazon goes a really long way to making, some of those cabinet pulls look updated. So between some of those things, appliances, we're also doing an Lvp flooring throughout. In my case, it was a much simpler decision because you have beautiful hardwood. I have disco era carpet. So we can rip up the gross carpet and put in some much nicer looking flooring with some paint throughout and really spruce up a really dated looking house, but that's in really solid shape, which are some of my favorites because you can make a tremendous impact with some paint and some flooring. And when you don't have to do the roof and the windows and all those other things, it doesn't have to be a terribly expensive rehab. So all in all, we're trying to stay under $10,000 for this rehab.
That's great. Yeah. And so if you hit that $10,000 number, what are you thinking in terms of the final plan, right? Is this a buy and hold, or are you going to do the cash out refi in this one as well?
Yeah, we'll hopefully do the same kind of thing that you're doing. So by buying it, by putting hopefully $10,000 into it, we'll drive that appraisal higher. This was also an estate sale property. So it was not well cared for cosmetically, but well cared for structurally. So in that, it was a little bit of a discount by making those improvements. Yeah, we're hoping to get the appraisal higher and then be able to do a refinance and pull that cash back out.
That's great.
I think another thing I'd throw in there too is that with a lot of these things, I know that I'm seeing people that are predicting like, oh, well, it's 2022. It's early in the year, the market's going to increase another 10% this year at least. And so all I really even have to do is hold on to this thing and that appraisal is going to turn out much higher. I'm not going to say that someone's wrong, but I'm also not going to bet on that being the right answer. Like we're still trying to approach our investing from like, what if the incline stops? Or what if we even see a little bit of a decline? Like, are we going to be okay? Or are we going to just lose it all? I'd much rather be a little more conservative in some of this underwriting where it all still works if the market stops, or if the market declines a little bit, we're not gonna get hurt.
Yeah, that's something we do as well is make sure that, no matter what, even if it goes poorly, 25% drop somehow in values, that we're not going to be underwater. And again, one of the advantages of doing a 25% down or conventional loan is that you have that equity built in, right? You've got that safety net kind of already established. Mm-hmm. Even when you're doing a 75% cash out refi, it's basically the same thing, but backwards, right? You're taking 75% of that value, which a lot of people look at and they go, gosh, they're giving you so much cash. You're over leveraging yourself. It's exactly the same thing as putting 25% down. It's just that they're writing you a check instead of you writing them one. So it's, again, I think that's built-in safety against market corrections. And if the numbers work, you can play it for the long term, which I really like.
Yeah. And I think that part of making that work in the situations that we're working in right here with these rehabs, I feel like one of the easiest temptations that we can fall into that would make that strategy fail is just simply the over improving.
Yeah.
We could completely take a bathroom all the way down to the studs and put in a custom tile, something, all that can be done, right? But I think you and I could very easily end up with much tighter margins or even upside down if we let these things go. So recognizing that they're the houses they are in the areas they are, we can make them on the higher end for that neighborhood. And by targeting only that, hopefully not going to go too terribly overboard.
Love it. Well, hopefully this gives you guys some idea of different approaches to a rehab. One a little bigger, fixing some rain in the kitchen, one a little smaller, just getting everything tidied up from a cosmetic perspective. I know David's already posted some pictures in the YFP REI Facebook group. I'm going to be posting some pictures and some videos along the way with our rehab. So if you've not already joined that group, we really encourage you to do that. That's the Your Financial Pharmacist Real Estate Investing Facebook group. Great way to connect with other pharmacists like yourselves, other investors or would-be investors like yourselves. So definitely encourage you guys to join that so you can learn more about what we're up to and see how these properties progress over time.
Yeah, so echo the Facebook page. If you have not seen the Dwight Schrute house, page. You know what I'm talking about if you have. If not, head over there and check that one out. That's the one that we're talking about today. So for me, I was looking for ideas for exterior paint colors to make this a much more attractive house with only a coat of paint. So the YFP Facebook page, the YFP Real Estate Investing Facebook page is a great place to come for some of those curbside consult kind of ideas. So if you're struggling with this, do I replace this? Do I paint this? Do I do this? Great place to get ideas from other pharmacist real estate investors.
Well, great stuff, David. I really appreciate it and hope you guys learn something from this and can take something back to your own rehabs. And we'll see you next week.
Thanks so much.
Thanks for listening to the YFP Real Estate Investing Podcast. If you like what you heard on today's show, please leave us a review and subscribe to the show so you never miss an episode. If you have a question, know someone that would make a good guest, or want to connect with Nate or David, head on over to yfprealestate.com and join the growing YFP Real Estate Investing Facebook group. As we conclude this week's episode of the YFP Real Estate Investing Podcast, an important reminder that the content in this podcast is provided to you for your informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. Information in the podcast and corresponding materials should not be construed as a solicitation or offer to buy or sell any investment or related financial products. We urge listeners to consult with a financial advisor with respect to any investment. Furthermore, the information contained in our archived newsletters, blog posts, and podcasts is not updated and may not be accurate at the time you listen to it on this podcast. Opinions and analyses expressed herein are solely those of your financial pharmacist, unless otherwise noted, and constitute judgments as of the dates published. Such information may contain forward-looking statements which are not intended to be guarantees of future events. Actual results could differ materially from those anticipated in the forward-looking statements. For more information, please visit yourfinancialpharmacist.com/disclaimer. Thank you for your support of the YFP Real Estate Investing Podcast. Have a great rest of your week.